Tesla has been skyrocketing this year, and they just announced a 5-to-1 split. Is it too late to buy? Let's dive into it. What's up guys, it's Kai here. Welcome to my channel where I talk about money, entrepreneurship, and finance. If these type of things interest you, please go ahead and hit the subscribe button down below and the notification bell to stay updated on upcoming videos. Today we'll be talking about Tesla stock and is it a good buy? We're going to be going over on some of the company things and what the company is doing and how that may affect the outlook on the stock in the future. We'll also be taking a look at some of the stuff that's going on in the stock market currently and how that may affect where Tesla stock may be headed. And lastly, I'll cover on what I plan to do with Tesla shares, if I plan on buying or if I plan on selling. Now, as always, I am not a financial advisor and this is not financial advice. So if you're ready to get started, go ahead and smash that like button. Let's hop into it. So recently, Tesla has been taking off. In the beginning of the year, it was about $400. Currently, they are trading around $1,800. Easily over 4 times in your money if you was holding it from last year. Just recently, last week, they announced a 5-to-1 split, which means that if you currently own one stock, after August 21st, that one stock will turn into 5 stocks. So for example, if you own 10 shares now, after the split, then you will own 50 shares. So just to be clear, that does not mean your investment will grow by 5 times, just the amount of shares. So for example, if one Tesla share was at $1,500, after the 5-to-1 split, you will then have 5 Tesla shares, each be worth $300. So with all of this massive growth, is Tesla still a great opportunity? Well, the short answer is yes. I'd say it's still a good buy. And here's why. So what most people know Tesla as is an electronic vehicle car company. And yes, they are a car company. But the big picture wise, they are much, much more. So just starting with the car company, they are smashing it in electric vehicle sales. They hold the largest market share for electronic vehicles. Their technology is years ahead of the competition. In the past quarterly earnings, they've been constantly beating their mark. They've been selling more vehicles and they cannot keep up with the demand. But let's hop over to the bigger picture of what Tesla really is and where they're headed in the future. So let's start off with autonomous driving. Tesla has been working on the autonomous driving mode where the cars can go ahead and drive themselves. So the more cars Tesla sells and sells, cars are driving all over the place, constantly collecting data. Tesla cars are pretty much supercomputers, constantly scanning the roads and collecting data, building their autonomous driving database so that one day their goal is that Tesla cars will be able to automatically drive on their own. Once this is achieved in the coming years and Teslas are able to autonomously drive on their own, Tesla will be in the robotaxi business. Tesla cars will be autonomously driving as taxi fares. People could just order a Tesla, it'll come to their door, pick them up, drive them wherever they want. And they will be able to achieve this multiple times cheaper than taxi services, Uber, and Lyft services because everything will be automated and solar powered. So in this model, it would make Uber obsolete, Lyft obsolete, and just take out their market share. All of that market share could be added to Tesla as they will not be able to compete because of the extreme low cost of operation that Tesla will be able to operate at. Tesla will also be expanding into the insurance business, which is one of the largest sectors. That's what Warren Buffett made his billions off of, is insurance companies. So Tesla will be offering its own insurance on all of their cars at a highly marked off discount. So insurance businesses are awesome businesses, high profit businesses, because they collect all their money up front and they don't have to pay out until people get into accidents. Now with all of Tesla's autonomous software, Tesla has the best data on monitoring their cars and the probability their drivers have of crashing. Whereas other insurance companies in the market such as Geico or State Farm, everybody just runs off of the general data that's provided amongst all cars. And that's how they're able to calculate the type of insurance rates they can offer. Tesla is very specific to their cars, so they can chop it down to see what the exact risk is for their cars, especially for cars that are using autonomous driving or half autonomous driving. With this specific risk, they found that Tesla drivers are much safer, especially with the autonomous driving, allowing them to offer a much lower rate. With the increase of Tesla sales, it'll be a no-brainer because they'll be offering during checkout, hey, you can also insure your car through us at this much lower rate. So they'll be hopping in the insurance business. That'll be also increasing their company value. Now lastly, here's one that a lot of people don't see Tesla as, is as an energy company. So Tesla also has a solar roofing business where instead of roofing tiles, you could replace your roof with solar roofing tiles and essentially making your whole roof a solar panel. Now they're aiming to make this cheaper than normal asphalt shingles. So it seems like it'll kind of be a no-brainer for anybody to replace their roof with Tesla's solar roofing, turning your house into a power generator. They're also selling power walls, which is like a battery pack for your house. The specs on this is crazy. Like it could run your house for like 7 days on a full charge, and of course tied into your Tesla car, so you don't have to pay for electricity, you don't have to pay for gas, essentially making your house your own little power station. And if everybody has that, it creates this little microgrid where everybody's generating energy, thus creating like a free energy environment. Also, Tesla is looking into creating power stations that could supply neighborhoods or maybe even cities one day. So they're going to be making a huge move into the energy industry also. And if you go ahead and take a look back in 2019, the top 10 revenue generating companies, you'll see that 7 of them are energy companies and 2 of them are automotive companies, which Tesla is already killing it in. So as the world moves away from fossil fuels and moves more towards solar energy, Tesla will be taking huge chunks of that market share also from this energy industry. And this creates an opportunity for it to generate massive revenue, further increasing the value of its share prices. So as a company, this will be a huge move on where I see they'll head towards in the future. Now let's just go over some of the stuff that I see in the stock market on why I think Tesla's price will go up. So recently they've been talking about on how Tesla may be included in the S&P 500. So the S&P 500 is an index fund that tracks the top 500 companies to make a representation of what the market's doing. So this is a huge fund that a lot of people's retirements dump into. It's one of the most massive funds available with trillions of dollars invested in it. So all of that money is divvied up amongst all of these companies. Just recently, Tesla has qualified to be included into the S&P 500. So there is speculation that it will be included. And if it is included, since they hit all the check marks that they're able to be, all of those trillions of dollars will have to be redispersed to allocate some of that money towards Tesla stock. Once some of that money gets redispersed to Tesla stock, as people passively invest into the S&P 500, they'll also be investing in a part of Tesla stock. So this will create more exposure and kind of like an automatic growth to the stock. Also, we went over that 5-to-1 split earlier. Currently, Tesla's about $1,800. A lot of people may look at that and be like, wow, $1,800 is a lot to buy for just one share. So once Tesla does its split, instead of one share being for $1,800, shares will split into 5. So each share will now be about $350. And though this did not create more value, it will create a different perception. So now with Robinhood and Webull making trading stocks a lot more accessible to a lot more retail traders like you and myself, people interested in Tesla stock that may have been on the fence of buying it at $1,800 a share will now see it as $350 a share, and it just makes it more inviting for people to hop in and go ahead and buy Tesla shares while they appear low. So history has also shown that stocks that have split in the past most of the time outperform the S&P 500 for that year. So as you can see, Tesla has a lot of value as a company and a lot of projected growth for in the future. Personally, I have a bunch of Tesla stock that is the largest position in my portfolio, and I'll continue to buy more. I see the $1,800 price kind of at a high now, but I have still been buying more. I keep investing in Tesla as I see it as a long-term investment. If you're looking to invest in Tesla to see some short-term gains, I don't think it'll be doubling overnight, but I think in the long run, maybe like in 2024, people have some crazy projections. In 2024, 2025, people project Tesla will be about $7,000 a share. Now, granted, this is before the split, but they're predicting that it'll be roughly about 4 times what it's worth today. And then there's some crazy predictions on where Tesla will go 10 years out from now in 2030. Some people are predicting it'll be like $40,000 a share, you know, short of just Tesla world domination. Alright guys, if that was helpful, please go ahead and hit the like button to help support the channel. Let me know if you plan on investing in Tesla stock or what's your take on it. As always, thanks for watching, and I'll see you in the next video.